everyone, I'm Gurleen. I hope you're doing well. In today's video, we'll be discussing the trade plan for tomorrow, that is March 21st, 2023 for Nifty and Bank Nifty, and a few select stocks which must be on your watch list. But right before we start, a lot has happened over the weekend with the classic deal in Swiss history between UBS and Credit Suisse. But it doesn't look like that the markets have been pleased. In this week, all eyes are on the Fed. Now, given these events in the recent weeks, and we are seeing so much stress in the global markets and financial stability come into question again, will the Fed pivot now or be dovish? We know that Fed cannot continue to raise into a crisis on an ongoing basis. Well, we are yet to find out. So stay tuned and don't forget to hit the like and subscribe button and do ring the notification bell so that you never miss an update. So without any further ado, let's get into the video starting with Nifty 50. So here on the daily chart of Nifty 50, you can see that the index broke the low of 16,848 and registered a new low at 16,828. But the forces of demand were strong enough in this zone of 16,650 to 16,800 to lift Nifty up on the higher side. And thereafter, Nifty has closed marginally near the potential reversal zone and within the parallel channel. Now, if you look at today's candle, you can see yet another long lower wick, third day in a row, which is sort of an indicative that demand is holding up at the lower levels. So what can happen over the course of the week? Let's take a look at the hourly time frame to understand on better terms. Now, first of all, on the hourly chart, this pattern that we were referring to, which was yet to be triggered above point B, was invalidated in today's trading session as the index broke below this 16,958 mark. Now, here you can see that we have a horizontal support line pegged at the levels of around 16,800 itself and also a declining structure. So one possibility here is that Nifty may continue to move within a range for some time and then decisively breaks out before catching onto the trend. Another thing to remember here or keep in mind is that we've been referring to this level of 17,170 and 17,200 as a strong resistance for the past couple of videos, and in the overall OI as well, you can see that the maximum call writing is at the levels of 17,200. So here the first conclusive sign of a positive move would be a closing above the band of 17,170 to 17,200, which would then take the index further higher towards the levels of 17,345 to 17,440. Once again, on the lower side, keep the levels of 16,800 and 16,650 as the marked support levels on your chart, which might be useful in the near term if the index takes a nosedive. On the 15 minutes time frame, you can see that there's not much of a development on the chart as Nifty has moved within the range of 16,800 to 17,200, and this action might continue with the volatility remaining elevated till the time Nifty takes a strong stance on either side. As we discussed in the starting of the video, that the Fed might be the trigger. So here for your reference, I've written down the support and resistance levels for Nifty on the chart. So the support level is at 16,888 followed by 16,550, and the resistance level is at 17,170 to 17,200. Now let's move to Bank Nifty. So here on the daily chart of Bank Nifty, you can see that after 2 consecutive days of positive closing, we are yet again in the negative territory with a hanging man on the charts with a long lower wick. So we've discussed this concept of a long lower wick n number of times, and now it's your turn to tell me in the comments down below that what does it mean. Coming back, if you observe here, Bank Nifty has traded within the range of the candlestick registered on Friday, the high and low of which is pegged at 39,705 and 38,926 respectively, making it an inside bar setup. So do we still have scope for a pullback on the upside? Well, yes, chances are that if Bank Nifty keeps on holding on to this low at 38,613, then we can expect a trajectory towards the higher side. But what really happens is that when we see such aggressive moves on the downside, it creates a lot of overhead supply. And at this point in time, it would be crucial for Bank Nifty to decisively break and close above the breakdown levels of about 39,400 to 39,600 for the bulls to have an upper hand. Let's take a look at the 15-minute time frame. So as we discussed in the last video, that Bank Nifty had achieved and entered into the harmonic potential reversal zone of 39,635 and 39,765, and we were expecting it it to cool off from here towards the averages, which it did with a gap down opening in the morning, and thereafter the index picked up towards the end of the day from the previous day low as it traded within an inside bar setup. Now if we move to the hourly chart, here the harmonic pattern has not gotten invalidated and is yet to be triggered above the level of 39,597, which is in line with the breakdown level of 39,600, as we were discussing a few moments back, that for the bulls to have an upper hand, Bank Nifty must surpass this level of 39,600. Then only we can expect a trajectory towards the levels of about 40,268 in Bank Nifty initially. Also, one possibility over here is that Bank Nifty continues to move in a sideways range and creates some sort of a pattern here before catching on to the trend. And the invalidation level for this particular pattern in the hourly time frame happens to be around the level of 38,925. And remember that it is yet to be triggered, so will not take any impulsive decisions but wait for the setup to unfold. So here for your reference, I've written down the support and resistance levels for Bank Nifty. The support is at 38,982 followed by 38,613, and the resistance is pegged at 39,600 and 39,705. Now let's come to stocks. Let's start with Reliance, which we've been discussing since the last week. So the update here is that the maximum downside that I was expecting in Reliance was 2,187, which was hit today, and Reliance picked up from the same as it was a harmonic potential reversal zone, and we have seen some positive shift in Reliance towards the end of the day. Now it will be crucial for the stock to hold on to this level of 2,187 so as to inch higher at least towards 2250 levels and save the sinking ships, that's Nifty and Bank Nifty. The second one is Tata Motors, which we had talked about in one of the videos that it's brewing up as a nice shorting opportunity. So here you can see that Tata Motors is trading below the pivot of 413.05, and this keeps the possibility of hitting the downside at point D at the levels of 385 open with an invalidation level of 442. So do let me know what do you have on your watch list and what's your take on the markets. On that note, it's Gurleen signing off. Until we meet again, have a good time.